to be the case. But today, though, we are pretty close to those 2018 lows. And I think by the time we close and post-adjustment, we would have made a fresh low for 2018. 10,229, and this is only for the Nifty futures. On the spot Nifty too, 10,225 is where we're at. And it's more disappointing than yesterday, I would say, because yesterday you woke up to a weak set of global cues. You were coming out of a long weekend, lots of data points to react to, and you fell unidirectionally. Today you started off with the promise of a rebound. It was all looking well across the globe, and then this U-turn that the markets have taken. So from a comfortable level of about 10,350, we followed a good 100 or rather 150 odd points from there. 10,220 is what we're going to just about defend and closing. About 1.5% gone for the mid-cap index as well. More excruciating pain for the small caps. 1.7% is the kind of fall that you're going to close the day with. Adani Enterprises, by the way, all of the Adani names, I don't know if there's any correlation to Subramaniam Swamy's tweet earlier on Gautam Adani or not, really cracked hard today. So Adani Enterprises loses about almost 10% in trade. There's Balrampur Chini down 8.5%. There's BEML, which has almost reversed all of its yesterday's gains, about an 8.5% downtick there. And banks all the way. So be it ICICI Bank, be it SBI, be it Axis, and then of course the Bank of India, which has collapsed about almost 8% as we speak. Just a few dots of green. That's BPCL, Ultratech, IndusInd Bank, and maybe a PC Jewelers and an IGL, which have managed to stay put. Nikunj?
Well, Aisha, it's not been a good close, frankly. What we've seen in last 2 days is a complete reversal of market opening trend. We started low yesterday, we recovered. Today we started, the early morning strength was sold into, and we've almost closed at the lowest point of the day. What's slightly disheartening, Avan, is that we've gone below an important technical level. Markets will, bulls will recognize that they are in a spot of bother. For the first time after a gap of many quarters, that's advantage bears. The bears know that they have an edge, and you want to exploit that, because bulls know that they need to run cover. They need to run for cover, and whatever gains were there, you can look at the screen and predict and indicate that wherever the mid-cap gains were there, traders want to protect those gains by cashing out or by selling out.
Yes, indeed. There is that sense of caution, as you say, on the street right now. The bears have a firm advantage, a firm grip on the markets. And, even as we were speaking to market experts earlier today, they're alluding to the fact that it wouldn't be entirely surprising as well, even if we slipped sub the 10,000 mark. And at the rate at which we're going, that doesn't seem entirely unlikely. We shut shop today with complete red on the screen, the broader end of the market too, reflecting quite a bit of negative sentiment. The breadth clearly in favor of the losing side, and a lot of the high beta names, a lot of quality names as well, coming off quite substantially in trade.